investors do not like uncertainty, and they also hate a situation where either the credibility of the Fed or the credibility of official numbers are being questioned as well. Do we need to question the credibility of the official numbers?
I think that would be premature. So what we have is here a case of the messenger being blamed for the underlying and not if this is a one-off, as I said, then that'll be the end of that. The direction in terms of the labor market has been softening, but from a very high level for many months now. And ironically, what this is actually going to be doing is, although President Trump was very unhappy with these revisions, strictly speaking, it makes it slightly easier for the Federal Reserve to cut rates in September, which is obviously something he's very keen to see there as well.
He most certainly is very keen to see those interest rates come down. What is your prediction then, Stefan? And getting back to what that means for Asia and Asian markets too, what is your prediction on what the Fed is able to do?
So, prior to the Friday release, the market was broadly pricing in 2 rate cuts. And I think now that we have this labor print, plus the very significant downward revisions for May and June, it makes it a lot easier to deliver those 2 rate cuts. The big question mark is still going to be on the inflation side, the other part of the mandate from the Federal Reserve. Here, I think we need to wait until September. Then, in mid-September, we'll get the August CPI print. Now, if that is higher than expected, then we're back to square one because we have sticky inflation, which is not helpful for rate cuts. If the the tariff impact is not so bad and inflation can actually move lower, then it's an open door to rate cuts.
So, in terms of market reaction then, Stefan, are you saying that the move we saw in the U.S. 10-year, I'm sure you noticed it as well, on the back of A, we had that huge miss on the jobs report, B, we had this whole BLS issue, the firing of the head of the BLS, and then C, Adriana Kugler, Governor Kugler, resigning early. Do you think the Fed side of it, Kugler resigning early, do you think that was more the reason for the 10 going from 440 to about 420, which is almost a 20 basis point move, which is huge?
Yes. And I mean, I think in general, what we're tending to see so far in 2025 is an oscillation of the 10-year Treasury in particular between about 4.2 and approximately just below 5%, and that's going to remain in place as we have all these sort of counter conflicting factors that will on one hand pull the rate down and on the other hand pull it higher. So volatility on the Treasury curve is here to stay. As with regards to your question on U.S. exceptionalism, yeah, I mean, if you interfere this way in what should be a non-political agency like the BLS, it just gives more fodder for those who are calling for the end of U.S. exceptionalism to take place.
Having said that, though, when you take a look at the most recent auctions as a gauge of demand, especially foreign demand for U.S. Treasuries as a safe haven, right? Yields have been low, obviously, right? But demand has been strong. And interestingly, I took a look at some data. It hasn't been, the usual institutional buyers. It's corporate buyers, which now have more of an appetite for U.S. Treasuries. What does that tell you?
Well, I mean, this is part of a trend that has been in place for a longer period of time. So I think to some degree, what people have been overdoing is making these kind of statements that, China is no longer buying U.S. Treasuries, and then extrapolating from that, the yields are going to, explode higher. This is not actually true. There's actually a very nice, diverse set of buyers. Sometimes it's corporate, sometimes it's banks, sometimes it's retail. The general trend, as you would see from the tick data, doesn't tell you that there's a lack of buyers for U.S. Treasuries. As I said before, I think you're going to get an oscillation between 4.2 and 5. When the 10-year hits that 5% level, people tend to think it's a good deal. And that paradigm, I think, hasn't been challenged yet.
I'd love to get your thoughts on what's going on with India and the markets there, Stefan, given that the tariffs being used not just to try to, so-called level the playing field from a trade perspective, but also being a political weapon, if you like, to try and, strong-arm countries such as India into what the US wants them to do, namely stop buying oil and weapons from Russia. Does this change your view materially on either the Indian economy or their markets?
So we've got about 3 days left, I think, until the August 1st tariffs actually, become cemented in. So there may be room for a last-minute deal. Who knows? We'll have to see what happens there. With the question with India is what the United States is pressing for is not just an end to Russia energy buying, but also to open up the agriculture sector to U.S. dairy and agricultural product, which is politically extremely sensitive in India. So this is not going to be an easy one. And it may end up being that India just accepts that the tariff is higher, and so be it for domestic political reasons.